Good day to one and all. This is Dr. Sivaraman of iknowintersys.com. So I'll be presenting Asian session live market analysis on 18th of July, and it will be a review of what I had given it on 15th, the forecast for this particular week, 15th, 19th, and also the range in which the currencies could trade in this particular week. So those things I will try to review it and also try to read the market for today and try to give you what could be the possible moves in the market. And also we will try to see the expected market moves for tomorrow. So to start with, let me just review the forecast, what I have given it on Monday. So this is the slide, a forecast slide. I have given it on Monday during the Asian Session Live Market Analysis webinar. And you know that Monday and Tuesday during the US session they firmed it, and yesterday they quickly made the rise during that of the European session and subsequently made the slide as expected. And unfortunately I was not able to present the Tracking the Forex Market Together webinar yesterday part 2 because of internet problem. Anyhow, so I wanted to show this how exactly the slide has happened, and also in the case of Euro they did not breach the high during that of the US session. That indicated that they wanted to make the slide. And what could be the possible moves today? A dip and a quick rise. You can see that they made the dip and then they are expected to make the rise. And then after a high level swing, they are expected to make the slide during that of the late European session. Then afterwards, swing and quick rise could be seen during that of the US session. So now you come across the market is showing Euro negative net change, GBP negative net change, and Australian dollar more negative net change as the USD gaining more. Then the denominator currencies yen, CHF, and Canadian dollar, they are all showing positive net change, and so all the currencies are showing the USD gaining more to start with, and afterwards they are expected to make a quick rise towards the late Japanese session. So from 5:30 GMT onwards, they are expected to gain. So here you come across they are holding near that of the low, making brief downward stop, and we will try to compare it with that of the initial lows and the highs and understand what they are trying to do it. Then they are expected to make a quick rise towards the late Japanese session and the early European session and make a small slide. Then they are not expected to breach the low again afterwards. So this is the right time to buy, and afterwards they are expected to gain the levels, and from there a little bit of slide could happen, and then they are expected to make a swing and quick rise moves. And tomorrow all that Japanese session they are expected to make the swing and rise, and European session swing and slide, just inducing the long holders to liquidate and afterwards make a rise to induce the short sellers to go in for short covering. So either way stop ends could be seen tomorrow from that of the late European session. So what you could do, you can buy now and book profit towards close of US session, and again tomorrow you can either do a small sell and buy trade or wait for the slide to happen from that of the mid-European session and then try to take the buy position and close it towards US session. These are all the trading ideas I like to give it based on the forecast. Now coming to that of the fine tuning of the levels, what they are shown. Now I explained that on Monday that what could be the possible range in the case of the 4 majors and 2 commodity pairs in this particular week. So I gave the low could be 1.300. They just showed 1.3025 area, and 1.3350 could be the high. They went up to 1.32, closer to that, and they formed 1.3175 as the high, or slightly higher than that yesterday. And they come back to that of 1.31 area, and they are expected to gain further today and tomorrow in the case of Euro. And in the case of GBP, you know that after BOE minutes, they just made a massive rise in the case of GBP to 5270 area, and then from there they started making a slide now, and they formed 5075 as a low yesterday during the downward stop and before making a rise. So the expected low in this week was 5050. They have come closer to that, and they already showed 5250 and above, and they are expected to gain further up about 100 to 200 pips. So around 54, we should be able to see it by Friday. Then in the case of yen, they just formed yesterday 99.05. So 99 area, that was the low expected in this week when it was trading around 100. And I was telling yesterday there is a great buy opportunity and they are expected to gain the levels. So that is what they have done it. It has come to 100, 100.07 and 100.19 is the high now. And they earlier on Monday, they raised it to 100.35 area. So they are expected to gain further up and hold above and inducing all the short sellers to come for short covering. Then in the case of CHF, so 94.25 was the expected low, and they just made further downward move of about 75 pips, 93.50 area yesterday, and then they recovered it to 94.30 now, and 94.36 is the high, and they are 94.73 they showed it, and they are expected to gain another 100 or 200 pips, and on next coming Monday they could straight go to 97.50 area, the estimated high of the previous week. Then Canadian dollar 1.0375 was the expected low in this particular week, and they went up to 1.0370 area, and then 1.06 was the expected high, but they have shown so far about 1.0425 area, 1.0433 now they are showing, and they are expected to breach that and go further high to 1.05 to 06 area, depending upon the triggers what they get it, and depending upon the traders' pending positions. And in the case of Australian dollar, 90.50 was expected low that has formed, and 93.75 was the expected high. Yesterday they showed the high 92.75 and above, and they are expected to gain from that of the dropped level. They dropped about 75 pips. I mentioned many times, whenever they make a drop for only 75 pips, they have got the great potential to reverse it entirely. And also in the case of GBP yesterday, you would have noticed that they dropped to about 50 pips and formed the new low, and then from there they gained straight 100 pips. And that is how they make the quick moves in the market. So don't think that when it is in negative net change and it may not reverse. Up to 75 pips, if they drop, they can reverse it on the same day. If they drop more than 75 pips, then their recovery on the same day is unlikely. The next day they will definitely recover, but you have to buy and hold the position till the next day. Then you will be able to see definite profit in such trades. So the expected ranges almost they have fulfilled the ranges, and now coming to that of the market reading. So we will just refer to that of the initial lows and the highs and see what they are trying to do in the market. Now the initial low in the case of euro today was 1.3107, and they just breached and formed 1.3092 just about half an hour back, and there is about 7 plus 8, 15 pips at downward stop, and they have to come above that of 1.3107. Then we will know that they made a brief downward stop before the start of the late Japanese session, and then they will make the upward move. And the high was 1.3128, that is intact. And in the case of GBP, 1.5192 was the initial low, and they just breached it by 20 pips, and they are coming to the closer to that of 1.5192, currently 1.518185 area. So they are also expected to gain the levels. So in the case of euro, it is less drop, 27 pips. In the case of GBP, 32 pips. So they are expected to gain the levels first in the case of euro in order to gain levels in euro GBP. Yesterday I was telling you that euro GBP, they wanted to drop Day for yesterday, they gained the levels and dropped yesterday, Euro GBP, and today they will briefly gain the levels in the case of Euro GBP, and you can see it in the net change. Yeah, it is almost flat, and they are expected to gain more in the case of GBP and hold Euro. As a result, you will come across further drop in the case of Euro GBP below 86. Then in the case of Yen, 99.47 was the low. This is not breached. 99.86 was the high. They breached the high and formed 100.19 as the high, and they are staying above that of 99.86 for more than 30 minutes, and they are expected to continue to gain the levels in the case of USD Yen today and tomorrow. So whenever Euro and GBP are gaining, they will be holding USD Yen. And whenever Euro and GBP are holding, they will quickly rise in the case of USD Yen and USD CHF. They are not expected to make the reverse move in the denominator currencies. Keep that in mind. So when Euro is rising, don't immediately think that you can sell USD Yen or sell USD CHF, and they may trap you. They may dip about 20-30 pips and then reverse quickly. So we should not get caught. So in all the currencies, we can only do the buy and sell trade. So in the case of USD Yen, it is a great technical trade opportunity, and they may just come below that of 100 briefly during the start of the late Japanese session. At that time, we can take a buy around 99.90, 95, and then they are expected to gain the levels and use the hedging order to limit the risk. And in case if they drop, they may drop only up to 99. So you can just book profit and keep another hedging order below. And when they rise, you can trail the hedging order as they rise the market until you are able to keep stop at entry. Then in the case of Canadian dollar, the low was 1.0401 and the high was 1.0420 initial high. They breached the initial high 1.0420 and trading still above that, and the high is 1.0433 and a small dip to 1.0425 is a buy opportunity, and they are expected to gain the level. As I told you, that the denominator currencies as well as the numerator currencies are expected to alternatively gain the levels, not the USD gaining and the USD weakening move. They will be doing all the time. So keep that in mind. And in the case of Australian dollar, 0.9180 was the low, and they just briefly made the downward stop, and 91.64 has become the new low. So about 16 pips. And then they are holding around that of the new low, but stop cutting the new low, and they are expected to gain from that of the late Japanese session. And 90-51 is intact. They are not breached it. And as I explained, that Australian dollar or the commodity pairs are expected to lead the rally to start with and lag behind. Now you find that Euro and GBP made lesser drop, whereas in the case of Australian dollar, they made more drop. So even if it gains from here, the gaining will be much limited. So it will lag behind. So in such days, on Thursdays and Fridays, avoid taking positions in Australian dollar. Instead, take a buy position in USD CAD. You'll be able to quickly book profit. And it will be making range-bound swings, and it may come to 92, 93 slowly today and tomorrow, but it will take a longer time to reach 93 area. Whereas in Euro and GBP, you'll be able to quickly book profit, and also USD Yen and USD CAD, you can quickly book profit. And USD CHF, they will be slowly consolidating and gaining the levels, so it might be patient testing. So according to that of the type of moves they are doing it, try to watch and take positions. Don't simply enter all the time in Euro. You can just look into the market and find out which pair they are trying to handle, and then try to take the positions. And if they stop cutting the new low for more than 30 minutes, you can take a buy position and keep the hedging order to limit, because we know that it could be either a stop and or extended move downward, extended move for 2 hours, and then they will go above that of the initial low and then start recovering the levels. By the time they will be gaining the levels in the case of denominator currencies. So that you need to understand. So with regard to the market trading, the entry is the ideal time, late Japanese session. When they are closer to the low, you can take a buy and keep 30 pips hedging order or the stop to limit the risk. And once the position gains the level of 25-30 pips, keep stop at entry and then trail the stop in profit-making position. Use the hedge order when a position is making loss and use the trailing stop when the position is making profit. And then subsequently keep the temporary limit as the price for the day. As they gain above that of the high, you can just move the limit order above and see how far they are able to gain the levels, and you just keep away 30 pips away from the other market, the limit order, and trail the stop 15 pips away from the other market. So market could either fill your limit order, take profit order, or that of the trailing stop, so that your profit will be protected. Then you can just decide upon the next trade. So exit, you have to use the limit order as well as the trailing stop. That is how we make the exit, because most of the people do all the analysis in order to make an entry, and sometimes the entry might be correct and they would not have been stopped out. Sometimes they keep about 50-70 pips stop and below that of the support and things like that, and they may not hit. But when the market goes up, they fail to exit out of that, and later on the market drops again and hit their stop. That becomes a very unfortunate situation because they are not using the trading strategy. A simple trading strategy of using a trailing stop in profit-making position and using a limit order to maximize the profit and move it away from the other market as they rise, that will be able to give you the real assurance of the profit. So because if you see profit in opposition, later on it start making loss, you will be repenting too much. And that may trigger the emotion. And next time when you see about 15-20 pips profit, you just grab it and avoid maximizing the profit. And then end up as a scalp trader out of market fear. Because have you ever seen the market making only 15-20 pips more? We always see in a day that they make about 100 to 150 pips more. And in such a scenario, we only look for about 10 to 15 pips or 25 pips. That means it is a decision taken out of the fear. And as long as the market fear is there in the mind, it is extremely difficult to decide on the entry and the exit. So if you want to really focus on that, entry and the exit without any fear, use the specific trading strategy to avoid taking any loss and subsequently maximize the profit, then your profit earning will be consistent in every trade. And always keep in mind early and the late sessions, they handle the pages, and first 1.5 hours and the last 1.5 hours or the early and the late session of each of the sessions, and in between session is the mid session, and 30 minutes gap between the session is gap time. So try to understand the timings of the market. So follow the timings of the market and also find out what are the pairs they are trying to handle at a given time, whichever is making quick moves and whichever is simply making a narrow range swing. You avoid taking position. When they make about 40 pips and above, the spread between the low and the high, that means they intend to make further downward as well as the upward stoppings. So that way you try to understand and also find out whether you can do a technical trade in some currencies, buy above that of the initial high or buy near that of the low, or sell near that of the high when they are not breached it. So that you should be able to identify and then try to take positions. Simply taking positions and later on trying to avert making loss by doing averaging every 30-40 pips averaging and this sort of thing will not work in the market, because the players know very well the emotional trader, when they make that drop, will feel like buying And when they drop another 20, 30 pips, they'll think that, okay, we'll do that averaging, so that the market reverse will exit without any loss. But they continue to drop for about 100 pips, then they cut all the positions because of over trading, then they gain the levels. So never do such accumulation of the positions, and take only one position at a given time. And if you are able to see the profit in that keep stop at entry, then think of another position, so that you don't incur any loss in your trading decisions. That is very important. So if you got any questions, you can ask me the questions. I'll be willing to answer to those questions. You've got another 78 minutes so that you can ask if you've got any doubt or any clarification you need. If there are no questions, there could be two possibilities. One, you have not understood anything, or you understood it fully. I don't know which category you belong to. Okay, then. I'll just review the forecast again. So, the expected market moves for today and tomorrow. So, the dip, they already done it, and they are expected to make a quick rise towards during the late Japanese session. And afterwards, swing and slide moves are expected during that of the European session. So, the rise time, you can take a sell and book profit during slide. Otherwise, wait for the slide to happen and take a buy, so that during the quick rise during your session, you can book profit. Then tomorrow again, they are expected to make the swing and rise during that of the early European session, and then slide during late European session. And people might think that it might be low volume, so the market may not move, similar to last week. And they may just cut the position, and later on they are expected to swing and rise during that of the late part of the US session. Oh, I'm not able to see the question. Someone asking, sir, you mentioned that they handle two currency pairs at a given time. How can one find out? Okay. Okay. I told you that they will handle only two currencies at a given time. So whenever they handle two currencies at a given time, they will be making a contrarian move in that. That is, now Euro is in negative net change and USD is in positive net change. So they are not handling. Because of that, Euro Yen will be making only a nominal gain or a loss. So there is no significant move. And similarly, Yen and GBP is showing USD gaining move, and Yen is also showing USD gaining move. So they are not handling it. And also here you find that all majors are showing USD gaining move. Here again, all commodities are showing USD weakening move. So normally they are handled in a nominal range, all the pairs. And especially during session start time, you'll find suddenly they will just make USD Yen almost flat, 0-0 or nominal negative net change, and Euro also in negative net change. That means they are making a downward push in Euro Yen and making a downward stop and before making a rise. At that time, you can take a buy in the Euro Yen or GBP Yen when they are making a contrarian move. And among that of the majors, how to find out? As I told you that the pair which is making more than 40 pips spread, they are handling at a given time. So here you find Euro is not making 40 pips. Yen is making 40 pips. So that they are handling it. As I told you, they are already gained above the initial high, 99.86, and they are holding it. So a small dip below that of 100, you can take a buy, and definitely they are expected to gain for the levels. And in the case of USD Yen, the spread is more. So we can buy near, GBP, you can buy near that of the low. And since the low has not been breached for 30 minutes of your observation, you can keep 30 pips hedge order. And in the case of CHF, the spread is less 30 pips, so avoid. In the case of Canadian dollar, the spread is less, so avoid. In Australian dollar, the spread is more, and it is closer to the low. Just now they made the breach of the new low, and again they come to about 73 pips. So when they show about 74, 75 pips, try to take a buy and keep 30 pips hedge order. And once the position makes profit, and trail the stop because the spread is more. So in the case of Australian dollar, spread is more. In the case of GBP, spread is more. And yen, the spread is more. So they are handling these three among the top majors. So the corresponding crosses, how we will know that they are handling it so that we'll have a definite profit whenever they make a contrarian move. So when they are making USD gaining or USD weakening move, you will not be able to make any good profit out of such trades. Then are you expecting GBP breaks the low before rise? No, they may not. Even if they do it, it may be just for about 1 or 2 pips. And then just create the market sentiment and they are expected to gain the level. So no more question here. So the range I have given it, you can watch it and watch for further rise in the case of Euro, GBP as well as USD Yen, and a nominal rise could be seen as the spread is not improved in the case of USD CHF and Canadian dollar. They may not be able to reach the high, I suppose, this week. Next week they could reach. And Australian dollar, a nominal gain to 92.75 could be seen. Next week they could go to 93.75. Either today or tomorrow also, sometimes they may do it in case if there is an aggressive gain in the case of Euro and GBP. But it will be lagging behind. Keep that in mind. So as far as initial lows and the highs are concerned, you find that Euro breached the initial low, still staying below that of the initial low, and GBP breached the initial low and still holding below that of the initial low. That means they are doing extended stop, extended move for 2 hours. Then in the case of Yen, they are not breached the low and they breached the high, an initial high, and staying above that of the initial high. And CHF, they are not breached the low and they just breached the high and staying above. So slowly they are expected to gain once the spread is improved. And in the case of Canadian dollar, the spread is low. They breached the high and staying above that of the high. Australian dollar, they breached the low and still they are holding it below the low. And they are expected to gain the level slowly and go above that of 90 to 51 by US session. Then market reading technique, I just explained it. So I'll be doing again, sorry, it's not 18. Today we had done it. So again on Monday, I'll be doing the Asian session live market analysis. And yesterday I was not in a position to give part 2 of tracking the Forex market together. And in case if it fits in the schedule of FX Street, the webinar schedule, then today I might be giving part 2 of tracking the Forex market together. At that time, you can join and follow up what the trades I have done yesterday during the European session and how I just closed them with a profit. And subsequently, I'll give the actual trading ideas, how exactly you can do it during the US session. So we'll follow the forecast that US session, they are expected to make a quick rise. So during start of the webinar, I'll be able to take some positions on the buy side in all currencies and try to show exactly we can book profit. So if you got any doubt, you can contact me through my email ID, dr@i-noindices.com. So thank you all. Either see you by 14 GMT today or on Monday. Thank you one and all. Thanks for your patience and understanding. Stuart has got a question. The PowerPoint presentation, what time of the day is the initial? It is 3:30 GMT. I noted down the initial lows and the highs.